Arizona CCIM multifamily panel. Today we've got guests Alan Mendelsberg, Michelle Cunningham, Omar Cresso, myself as moderator. We're going to be discussing, this thing about this COVID 2020 and how it's affected our multifamily market here in Tucson. And we want to let everyone know that we also have other programs and stuff coming up in the future this next month, and those will be marketed. I want to go ahead and thank our sponsors. Of course, our gold sponsors are Compass Bank, Brightview, NB Arizona, Title Security, Stewart Title, Wells Fargo, Larson Baker, and of course, Realty Executives and multiple other silver sponsors. If it wasn't for our sponsors, we wouldn't be able to do programs like this at no charge to our community. So we encourage you, if you're looking for, construction, banking, title work, any of our sponsors can be glad to help you out. Please do business with our sponsors. So definitely, of course. So we got a couple sponsor commercials. Go ahead, Tiffany, run those for us, please. Oh, I'm not hearing any sound. Bear with us, please.
Hang on. Sorry, I don't know why it's not.
Okay, technology.
It was working yesterday.
Yes, it was.
You guys can't hear it at all?
No.
All right. Well, we'll skip on then. I'll see if I can figure it out before the end.
You bet. I'll go ahead and talk about our upcoming events. Later on, we've got the designated elections for all those designees that are listening on the panel. Please go ahead and make it up for September 24th. We've got that as well. Chapter members are designees and our candidates. We have a site to do business program coming up first month. Oh, you jumped ahead of me. There we go.
Sorry.
Okay. Back in October, those independent brokers, we have a broker clinic for October 5th, 12th, and 19th. If you need your renewal hours for that, please do go there. And we also have some more webinars coming up in November, December. So we'll go back to our sponsor spotlights.
Well, I'm still trying to figure it out.
Okay.
So keep moving on. We'll see if we can get it at the end.
Okay, so on our panel today, we got Alan Mendelsberg with Picor, Omar Cresso, Realty Executives, Michelle Cunningham, For Low Property Management. And I'm going to give them the floor for a few minutes. Alan, we'll start with you and give us your bio and what's going on.
Alan Mendelsberg. I'm a principal over at Cushman Wakefield Picor. I've recently hired Conrad Martinez, and we comprise the multifamily team over at Picor. Market is hot. This is a very surprising, predicament we're in. We were expecting to slow down with COVID, but Tucson really hasn't missed a beat. And there's a lot of excitement, a lot of good energy, and a lot of investor interest in our marketplace.
Okay. How long have you been doing multifamily, Alan?
I've been doing multifamily for about 10 years.
Good for you. I think, Michelle, you're next on my list here. Go ahead.
Hey there, my name is Michelle Cunningham. I am a broker and property manager at Fort Lowell Realty and Property Management. We largely focus on stabilization of difficult properties, but we do take nice properties as well. I'll have to agree with Alan. We've had a lot of activity despite COVID. And things have been booming. We largely manage properties, between duplex up to 75 to 100 units. And a lot of C-class property, but we do have A-class, B-class as well. And I've been doing that for 8 years at Fort Lowell Realty and 16 years in total.
Great. I also want to toot your horn a little bit that you're working on your CCIM designation too as well. So congratulations.
Yes, thank you so much.
You're welcome. Omar, you're next.
I got Omar Cresso, Realty Executives, commercial and investment brokerage. Been here for 4 years, focusing on multifamily. I would have to agree with Alan. At first when COVID hit, we're all a little like scared on what's going to happen, but it's booming. It's doing pretty good. and still pretty excited doing it.
Great, thanks. Thanks, everybody. All right, so what we kind of designed this little education program for you. We're going to go ahead and start on the, I've got a couple slides here. We're going to talk about at the national level, what's going on with multifamily, break it into a little bit of what's happening in Arizona, the Arizona multifamily market, and then focus it down, funnel it down a little bit more to the Tucson market. And then we'll get into some question stuff for our particular panelists. So, so what I'm going to do is go ahead and put a couple slides up on the panel. I'm going to just kind of open it up a little bit for discussion. I'll kind of describe it a little bit. Then I'll do a round table between Alan, Michelle, and Omer, see if they want to comment in each one and see what they see. What we got here is is obviously the net supply and absorption occupancy graph, and it only brings us up through the end of 2019. But the reason why I kind of brought this up a little bit was because this is a nationwide absorption and completions by units, okay, across the country. And then you overlay the occupancy percentage on there. The one thing that's kind of interesting on there, for me, you can kind of follow the blue bars, and it kind of got that slant to the right, or the slow down, a little pickup in 19. Then you got the absorption as it kind of crescendos up to 18, then it kind of rolls down a little bit at 19. Then you've got the actual occupancy percentage kind of zigzagging all across the board. I just thought that was kind of interesting, slide a little bit of data there. And before I comment on it, I'm going to hear what Alan, what you got to say. What do you think what does that say to you? What do you interpret that to be?
Well, I think locally it's jobs. Job activity is, we're getting some high paying jobs in our market. We are predominantly a low to low middle class community, and we've been adding call centers and distribution center type jobs for years and years and years. And now bring in Caterpillar, Raytheon growing, Hexagon. We got some high paying employers in our marketplace. And it's giving developers comfort in building.
Yeah. Michelle, what do you see from your end?
Yeah, I definitely, I agree with Alan on that, but I also think that we are now in a place where, like, Tucson has gotten really cool. We're able to attract our young professionals and keep some of our young professionals here. And I think that's had a huge impact. And I've said this before that, when I first graduated college, there just really wasn't much going on here. But now, I mean, COVID aside, there's just so much to draw you to Tucson between, being up and ability to pop up to Mount Lemon when everything goes back there, all of our hiking trails. We're obviously a huge mecca for cycling. And, the New York Times had a write-up on us. So I think that we're just really on the radar. And people are seeing that we've got a cool little town here, and they're starting to flock in this direction, and wisely, I think.
Yeah, Omer, what do you see there on that slide?
Well, what I'm seeing in the slide, I mean, it's pretty interesting. You're seeing, nationally, the occupancy is up, maybe a little down in the fourth quarter, but in Tucson here, when you compare, Alan's right. I mean, it's jobs. Like this morning when I looked up jobs in Tucson that are available on postings, 6,300 new jobs, that out there looking for it. So that's bringing in that population. And if you look at what downtown used to be, I don't know if you guys remember downtown like 5 to 10 years ago, dead. Even, summertime is pretty dead. But now, summertime, before COVID, obviously, it's packed. The parking lot, Old Pueblo parking over there is packed. All those Hexagon, Caterpillar, the trolleys brought stuff in. You have Humberto Lopez building. Art, I believe, built some units down there. So that's a huge attraction building from inward going out.
Well, I mean, when I looked at that too, it's very typical with my builder and developer friends. They see a couple statistics in the market. It's like they hurry up and go out and build things, and then the market's got to absorb it all, and then we'll probably go up and hurry up and build a whole bunch of more things national. But then again, you go ahead and put but the movement of the populations there really doesn't quite coincide. So let's go jump to the next one, Tiffany. Next slide you got there. So this is effective growth markets, okay? So we're gonna, even though Knoxville's on there as the #1 through 2019, Phoenix is up there too. Is number 2 as far as a growth market. The interesting thing on this slide that I saw, 3.8% as far as the effective growth rate for the country. You got Phoenix and Knoxville cranking up there, way above 6%. Alan, what do you see there? What kind of comments do you want to make on that slide?
you know, I know the next slide, it has Tucson on there. I think it's going to be very interesting how this chart looks after the eviction moratorium. You know, whether, you know, Michelle could comment on this. We're talking owners that have months, you know, tenants with months and months and months of past due. And I think it's going to be a headache, you know, once all these tenants are, you know, able to be evicted. I think, you know, I don't know. I'm predicting that we're going to be flat rental growth in the short term.
Okay. Michelle, any comments?
Yeah, so actually, in terms of the rental growth, and they have Phoenix here as one of the highest grossing, but the COVID aside, we're actually beating these figures in a lot of our rents. So one good thing is that the rental market is actually really strong. So when we have these vacant units, we're able to rent them, and sometimes at like significantly higher rents. You know, for example, something that was like in a C-class property a couple of years ago, it was still normal to have like studios at 300s, one bedrooms in 400s, and two bedrooms in 500s. And now we're already to a space where virtually no studios are in 300s, no one bedrooms are in 400s, and no two bedrooms are in 500s. But in a lot of places, like $200 plus increases. And we're still getting those with ease during COVID on the units that are vacant. But yeah, absolutely, I think that, you know, COVID is going to affect this quite a bit because, you know, we are going to have an issue with just a mass exodus of a ton of people who have such high balances that there's going to be some deals cut. But that's also not something that's unique to our market here in Tucson. You know, everyone, not only nationally, but, you know, the whole world is having the same issue. So we might see all of this perch down a little bit, but overall, I think it's still going to continue to go upward.
Yeah, hold on thought. Omar, you want to expand on this one?
Well, I'm kind of in agreement with Michelle there. You're kind of seeing what we're seeing throughout the whole United States, we're seeing here in Tucson. So we're a little, you know, smaller version of everything else going on, but we're all in the same boat. So whether it's, you know, investors coming in from out of state and, you know, buying properties here, well, they're running into the same issues on where they're from. You know, whether in San Francisco or they're out of Las Vegas or wherever they're, you know, coming in from, they're running into the same problems and issues. So this is not just unique, won't be unique for us, but it's something that we're going to have to like plan around all throughout the U.S.
So as Tiffany pitches over to the next slide that we got coming up here. So we just left a slide that ended at the end of 2019. Then at the end of March in 2020, okay, markets for rent growth. You notice that we got Phoenix on the left side and Tucson finally jumped into that bracket area there. So, Ellen, want to comment on that with us?
Well, I think, you know, speaking as a whole, the rental market's been the strongest it has been. You know, it's with the strength of it, we've had a lot of owners that have decided to do, you know, full renovations, and new investors have decided to do major renovations here in the Tucson market just because of how strong, you know, our fundamentals are here in Tucson. You know, I think we're going to have a little bump for a few months, but I think, you know, Tucson's an exciting place. I mean, you know, I would say right now, 85% of the investors looking in our market are probably from outside of Tucson. You know, we're getting flooded. You know, it's coming down to supply versus demand, and right now demand is through the roof. And you know, as far as sales go, we just don't have a lot of supply. So that's why, you know, I think, you know, Tucson will be strong, and I think people will continue to put money into properties.
Exactly. And Michelle, before I go to you, I'm going to cue you up here, Michelle, a little bit. But this graph compares, you got two Arizona cities, the two biggest cities in Arizona, to the nationwide market economy. Okay, so now Arizona's on the radar. You know, obviously the Austin in the middle, Knoxville fell down because the previous slide was at #1. But what do you see there, Michelle? First year.
Yeah, no, I absolutely, I agree with Alan as well. You know, and two, we have kind of a dual growth, which is both, we're bringing in people that have higher incomes. I think it's something like 40,000 people with $80,000 in income per month. So there's going to be a great need for a lot of nicer, nicer B class, A class units. So I think that we're going to be doing a lot of renovations of current buildings, but then also, we still have, a great need for lower income properties as well. So yeah, I think that the real problem right now is inventory, because for rent growth, I mean, our rents are still just substantially lower than so many other places in the nation, and there was so much room for growth, and we're actually really getting that now, and without pushback on that. So I think I mentioned previously that these rental rates are saying 5% rental growth, and in reality, these figures are higher than that.
Omar, any comments?
Well, another little interesting, when you look at, the state of Arizona, we're up 2% in population. And then if you look at just single family house, August was one of the highest records on month. So you got quite a few people that are also buying homes for themselves, but yet we still have this huge demand for rentals, for multifamily. So it's pretty interesting, just that growth that's coming in. And then I talked to an apartment manager, and what she told me on one thing is quite a bit of the millennials that they're renting out to, they will pay top dollar in rents because they're doing all their work on Zoom. There's no more office. So they want something that looks nice, so they're willing to pay for these things. So that was pretty eye-opening when she told me that. She has like 400 or 500 rentals, and majority of these units now that she's renting up, they want something that looks nice because they're always going to be on camera.
Mm-hmm. Okay, let's Tiffany, why don't you roll me the next pair of slides right there. We'll kind of bring this down a little bit. So we went national, went Phoenix, Tucson comparison a little bit. Now this is Tucson specific, and I want to give Alan and Picor there the credit for these two slides that I picked up off your report. So they're very appropriate to what we're talking about today. But we had one comment there in the question box. Personally, I snagged right there. Want to know when the last time Tucson had an occupancy above 90%, or when was it 90%? And I think I made some notes here. That was 2015, I believe it was. Alan, you want to comment on these slides in general, or just that question there?
As far as occupancy is such a tough part because Tucson is so different, from south to Tucson to university. But this is definitely the strongest the rental market's been, the most positive the owners have been. It's a lot of the projects that, some of the deferred maintenance that a lot of these owners had 4 or 5 years ago are now taken care of now because of the occupancy is strong, rents are strong, sales activity is strong. It's a good time to be in Tucson, and we're happy, we're busy, with everything going on.
Michelle, tell me about those two slides, especially the one on the left there that you see. Price per unit. You don't get too much brokerage. I'm not sure what your brokerage background is, but for property management, occupancy and rent, what do you see there?
Absolutely, I agree with that. That it's important to note also that it really does depend on where the property is located and whether or not it's like an A class, B class, C class property. And actually, that COVID has been affected very according to that as well. But yeah, in fact, like we're seeing the lower vacancy rates even up in like Oro Valley and newer development. C class properties still tends to have a few percentage down. A higher percentage of vacancy, and but even we're filling those more frequently. There is just a higher degree of turnover in that. But really, the absorption rate is as quickly as we get them back and ready, they are rented, and they have been rented at higher rates. Like I said, up to $200 plus in some cases.
Wow. Omar, what do you see in those two slides right there for us?
Well, the one thing I'm really noticing on the right-hand slide, their price per unit, you're seeing like 2018, you're over 70,000 per unit, 2019 going down, 2020 slower. I think a lot of that has to do with the type of property. Is it value add, turnkey, and whatnot that's going through? And right now we have a short supply, huge demand. So I would assume that would start shifting, and changing. But a lot of stuff my clients are buying, they want the value add property. instead rather than the turnkey. So that's where I'm kind of looking at things in that price range right now.
So I'll go back and kind of pick up on a comment that Alan, that you made about your ownership is happy. And that left slide right there, you can see where the effective rent is creeping up, creeping up, creeping up. Okay, and then you got Michelle making a comment that every time we turn it over, the unit over, we can turn it over for more rent. So that keeps going up, going up. And then we got that little bit of a drop off there. But don't forget, this is through June of 2020. A little bit of a drop off there after the second quarter of 2020 here a little bit. But the vacancy rate is still going down. So that means that spread right there is cash profits. Can you say?
Yeah, you know, this chart's a little hard to read because there's been a considerable amount of new inventory that's been added to this analysis from 2016 to 2020, which has come in at significantly higher pricing that has skewed up these numbers. But as a whole, you know, everybody's been improving. You know, and Michelle could comment, some areas of town, it's a little improvement, and other areas of town it's much larger. But, you know, Tucson's very location based with a lot of these investors, and how high you can get rents are in certain areas. But yeah, they're all going in the right direction.
So the new inventory has obviously been on the perimeter of town, right? I mean, Oro Valley, the Marana areas.
Yeah, the new, are you talking as far as brokerage, or are you talking about as far as
Construction.
Yeah, I mean, Tucson's developed, you know, and this is what I tell, we got a lot of guys that call us to want to do infill projects. And there's just a select area of town or places in Tucson where by the time you factor in acquisition cost and building cost, you need to get X for rent. And you can only get X for rent in little pockets of town. So that's why you see most of the new development going, you know, up in Oro Valley and kind of, you know, outside central Tucson, which is mainly developed with 60s, 70s, and 80s properties.
I agree. Anything on the slides that the panels you guys want to comment on that I might have missed before we move on to some of our other discussion topics?
I think the biggest thing you guys are looking at per unit basis is, you know, back in 2016, 2017, we're kind of average on a really distressed deal. Your kind of average entry was kind of in that 25 to 30,000 per unit. And now those same deals are coming in at 45 to 50. So that just kind of shows you the overwhelming amount of new investors that have come into this marketplace. And in 2016, I'd say our investor activity was probably closer to 40% local, 60% out of state or out of Tucson. And those numbers have flipped. And, you know, the out-of-state investors are willing to pay more. And it's, you know, you go through the sales list in 2019, 2020, you don't see a whole lot of Tucson owners. It's mainly owners from outside of Tucson.
And Alan, do you think it's because they're coming in with different visions or different perspective is different from the markets they're coming into? Even though you give them the data, is their perspective different?
With exchange buyers that are selling properties at 4.5 caps in other markets, and a 6.5 cap looks like an amazing deal. You know, I mean, I could tell you, we're going to probably sell 40 apartment complexes this year, and our average time on the market's going to be 8 to 11 days. It's these owners or these investors are buying tiny spreads, and they are looking to tie up money in the Tucson market because of all the positivity that we're talking about. You know, it's definitely, I can tell you, we have more Phoenix investors in our marketplace than Tucson investors. It's a place where surrounding markets have really, you know, dried out, you know, because Tucson, if you look at Tucson as a whole over the last, you know, 6-8 years, we kind of have been just sliding along, and we are really right now seeing our growth. While most of the surrounding markets have really seen a much steeper rise, kind of fizzling out a little bit. This is our time to, you know, really grow.
Okay. Michelle, you want any give us your final comments on these slides before you move on from from your perspective.
Yeah, no, and I absolutely agree that, yeah, we're getting a lot of Phoenix investors here in Tucson, which is also affecting a lot of our inventory because a lot of them are, they are doing kind of these renovation projects and in clusters that are central in town. I think that we think a huge mecca is like right at Grant and Tucson. There's some cool gentrification projects taking place there and also kind of just scattered throughout, but that's the way Tucson is. You can have like a funky, cool place. I'm catty corner from like a trailer park area, and it's just that's the way Tucson is. So they're totally gentrifying communities midtown, and that's working out as well. So I think that we are getting like a variety of property to offer more to prospective residents, and like I said, with them just being more on the radar in general, because I'm seeing a lot of people even from Oregon, and it just really feels like within this last year, the calls that I'm getting are significantly more widespread, and very few of them are from Tucson. So we definitely, almost all of them are not from Tucson, which I always kind of, I get a little sad about that because I want, Tucsonans to own Tucson still. But yeah, that's absolutely what we're seeing, and they're bringing their influence here. So we will see changes, just in our little town here. So, but I hope that we can still keep it charming.
Omar, give me some comments on those slides we just went through.
Well, it kind of reminded me of the whole, it's happening. Don't, I've seen those t-shirts, don't California, my Arizona type of things. But yeah, majority of my clients from out of state coming in, these are deals to them. These are, hey, look, I can make a 6 cap. Great. I'm flying on, as high as I can be, because where they're coming in from their markets and the property they're selling is completely different from what we got here. Here they're nice and slow. And the other thing that I'm getting quite a bit of talk about is the relationships with the tenant, the different laws and different type of things and how evictions will work compared to what they're doing in California, which is scaring some of them. These are the conversations that are coming into me. So pluses on Arizona, Tucson, and majority.
Okay. All right, we're about halfway through, so I'm going to flip over a little bit and go to the some of the discussion topics. We'll have a roundtable about that. We'll do that probably for about 20 minutes or so. Then we'll get into our questions and answers and stuff that Gary Heinfeld and Tiffany will help me field those. And then before we go, I want to get some closing comments from each one of our panelists, what their opinions and thoughts of the rest of 2020 will be in the beginning of 2021. So that's how we'll formulate the rest of our program here. So let's go to the topic of the local regional. All right. So we kind of had a little conversation about some of the slides and stuff, but what about some of the traditions between negotiating with Phoenix and other buyers from out of town? Alan, want to start that, answer that for us, if you mind.
You're talking about working with other investors
Yeah.
outside.
Yeah, different negotiating traditions, styles, expectations, pluses, minuses, pros, cons, everything.
They're all the same to me. Just a little difference when we get some East Coast buyers who tend to run everything through their attorneys
Okay.
locally. But right now it's being in a seller's market. The sellers are dictating the terms. It's a competition for buyers. So if any of these buyers have anything funky in their offers, they're not getting it. We got too big of a market, too big a demand to get anything funky from maybe another market that you might see when it's flipped, when there's way more supply than buyers. But yeah, we're getting quick cash deals and several offers on almost every property we take out.
Michelle, what do you see as far as any out-of-state people coming in asking questions about maybe some of the laws? Just kind of hit on that just a little bit, different styles, traditions.
Yeah, obviously we talk a good deal about evictions, and now that's more relevant than ever. But yeah, no, it definitely. I think that regardless of where they're coming from, every seller or every buyer comes forth with their own set of concerns, their own set of goals, whether or not they're a long-term hold, short-term hold. looking to upgrade the property, looking for a 1031 to just live off of. And so really, rather than where they are locationally, it's more important to just see what their long-term plans are for the property, and we hand cater that to it.
Homer, what's your thoughts, sir?
I mean, we're like Alan said. I mean, I got people calling left and right. Let's make cash offers, close in 14 days, and do whatever we can to get these things. And then the one big question everyone is just asking is, they're asking me, is this sustainable? Meaning they're not too sure on what's going to happen with COVID long term, but if it's sustainable, yeah, let's move forward. Let's jump on this. And quite a few people are, hey, before I sell off, meaning that they're selling their properties out in, let's say, California, and they're doing on their contracts where they can extend close for another 30 to 45 days so they can find something. And that's been pretty common lately.
I mean, I would tell you right now we are low on inventory strictly because owners don't have anywhere to place their proceeds.
Yeah.
So we're facilitating, you got, working on a bunch of deals right now where, we're having to give owners up to 3 to 4 month close just so they have the time to try to identify a property within that time period. But that's the reason why we're slow right now is there's nowhere to place money when the supply is short. Unless you're looking in different markets and different product types, you're going from a position of power as a seller to a position of weakness as a buyer, and there's no way to get around that.
And I'm also getting a couple people that are like, well, I got to get my price. And I'm like, well, you want to sell it at 4.5, 5? Like, I got to get it because I'll pay the capital gains because I can't find anything.
Right.
Wait to see if the market adjusts. So I've had those conversations.
All right, the next question I got here on my list here is some of the statistics in Tucson relating to the PPP recipients, so the loans that were given out, and unemployment in general. Has that kind of touched or hit on any of your investors, clients, buyers, sellers, property management stuff? Michelle, I'm gonna start with you first. What do you think?
What do you mean, just in terms of owner loans and how like evictions and non-payments have affected them?
Yeah, just as a general rule. We'll get more specific in the move-in, move-outs, and evictions and stuff in a couple more questions, but the unemployment environment in general, did they have to lay off staff at the properties? Did you guys have to lay off any staff? Did your owners get PPP money that you're managing?
Yeah, we actually weren't as affected as we thought. Like, things were significantly better than we anticipated. I think we all expected maybe a 30% drop in rent, and it was significantly less than that. So actually, we have not been affected in that way quite yet. This is the worst month that we've had, but so far, I mean, really, we came in at 98%. The first month that we thought we were going to get hit, 95 the second, but yeah, this month we're down 15 to 20%. And that really affected our qualification process for applicants, because we do know that the unemployment is potentially running out. So unfortunately, that's not a viable form of income at this time. And so we are definitely getting a lot of applicants that are not qualified for units. But I mean, even if you just obviously drive around Tucson, you see all the closed restaurants, closed stores, which represent 10, 20 plus new lost jobs.
Yeah. Hey, panel, what about the general vibe of the COVID-19 in general? Okay. Whether buyers selling, showing apartments, viewing stuff, people's attitudes, blood in the streets, crisis coming, Armageddon, that type of thing. Omer, we'll start with you and I'll keep going around.
In April, it was total fear. I had, a couple deals fall apart due to this. Scared. And as things adjusted and changed, and it seems like, it's getting way better than expectations, people are starting to calm down. There's a lot of cash out there. There is a good amount of cash, and people are still willing to make that investment. And they like Tucson because, we're positive. We got growth and all those things. So that's the conversations that, I've had. So they're like, hey, find me something. Let's keep moving. I'm sticking to Tucson. So that was probably started in June again, June, July, August. Now, you know, we're moving along, and people, just the question is if it's sustainable, because like as the conversation, as I said earlier, as we talked about, what's happening here isn't just here, you know, it's happening throughout the United States. So, and how things will adjust. So no matter where you are, if you're investing in multifamily, you're going to basically run into the same issues.
I mean, we all know that the real estate's regional and local, always will be, but we want to get a feel for the general vibe. Alan, want to comment on that at all?
We didn't slow down at all. I think once coronavirus hit, we really shifted our focus to exchange buyers, and it really helped us get a lot of owners that were on the fence. This was the thing that we needed to help push them over, and we were able to kind of, we put several deals together just by saying, hey, we got a buyer that needs to buy, and he's willing to pay fair market price right now, and you don't have to take the risk of what happens with coronavirus. But the biggest thing I would say is everything just became a little harder. You know, we lost a segment of the buyers that were looking for blood. There's no blood. There's absolutely no blood. Lending became a little bit more difficult. Appraisals, we've had several appraisals that have not appraised, but it's a hot time. This is, you know, I've been in this business for a long time. This is probably one of the busiest times that we've ever had right now, and it's just finding product right now. If you find product and it's priced reasonably, it sells quickly. So no real change with that coronavirus.
Alan, in your comment, you hinted about some of the extensions and that type of thing. That's the next kind of group of questions that I'm going to throw out at you guys. And Michelle, feel free to comment on this too as well. But it's got to do with like extending closings, appraisal issues, things of that. Tell me what you guys have seen out there. Omer. I'm sorry, Omer.
Oh, okay. Well, several appraisers I've had where they'll just drive by. They won't go in. They'll take photos from the outside and that's it. Some closings got extended. That was earlier, probably in April, and now everything's kind of back to normal. I've had a couple of appraisers ask, "Hey, is anybody tested positive? Because if it has, definitely not going in that section." Stuff like that. But everything's seeming to go back smooth like it was before.
Okay, Alan, what do you experience any of that stuff?
I would say that, you know, we've had a couple deals that financing got pushed back on. A lot of student housing, you know, and that's another trend that we can talk about later. But with student housing, it was a lot of the banks wanted to make sure the students were back in school in August, and we had to delay closings until we we've had a few banks that have, we've had a couple of 70, 80 unit apartment complexes that have seen significant delinquencies, and they've kind of readjusted terms midway through the process. But I think every deal that we've had under contract, we've got closed. But
I
think it's having a willing seller that knows that there's going to be issues, and we were able to work through them all. But appraisers, I mean, unfortunately, as bad as this sounds, I mean, we're inspecting every unit still. I think we've gone into every unit with appraisers. We really haven't seen too big of a change as we probably should have for the pandemic that's going on.
So Michelle, you're sitting there ready to receive a property from one of these brokers out there in the field that's just closed the deal, and it gets extended, it gets postponed. I mean, what about you in your business about taking over a property that's been extended? Anything that you've seen?
Well, yeah, I mean, and I tend to follow them from the very beginning while they're still going through the purchase process. So, yeah, they're, especially when I already have the property, we are getting a lot of kickback on the non-payment of rent. So that's definitely affecting loans. We're finding that they're trying to see what in the world we can do about that. And then obviously the new CDC regulations, that is affecting some of the loans going through. But again, I haven't seen any of them full-blown pushback yet. So in terms of them being delayed, that's really not that big of a deal. It's to be expected, right now. So, I mean, we just kind of stay in a holding pattern with that, and that's just fine. That's no issue.
Michelle and I have a deal that's been
Yeah.
under for about 6 months.
Yeah.
Yeah.
Yeah. Yeah.
All right, that kind of leads us into that next little group topic, kind of the collections, obligations, that type of for the tenant. And I'm gonna kind of gear this next question a little more to Ellen and Omer, and then Michelle, I want you to comment on what they're saying, all right? So as we go through escrow, we prorate rents, what rents have been collected, what rents have been collected, what kind of, deadbeats we're dragging along with this. What's the assumption when you guys get to the closing table, Ellen and Omer? I mean, are you assuming that the rents that haven't been paid are paid when you go to the closing table? How are you handling that? Ellen, I'll start with you.
I mean, it's negotiated. It's case by case. Of late, it's kind of been, hey, we know this is the middle of a pandemic. It's going to be a nightmare for whoever when the eviction moratorium is closed. You have up until the close date to collect all the past due you can, and we're leaving kind of the new buyer with a semi-fresh slate. But it's, the last thing you want to have happen is having such a delinquent, a huge delinquent amount, having previous owner competing with the new owner on who gets the rent. So we try to end, all prorations at the closing table as often as we can.
Right, so it's all done. Omer?
Yeah, well, like right now I have something going on where we negotiated basically it's going to be as it's paid, because there's some COVID people haven't paid due to COVID, and they're going to try to collect after it closes. Disclaimer, I don't know like if legally they can or can't, but that's what they want to do. They're going to go after the tenant for that missing portion of rent.
So Michelle, what Alan and Omar are saying is they're probably, wiping the slate clean to zero when they give you the property. You're receiving it. Are you getting any little bad boy marks on somebody's file that they're 2 months late? Keep an eye on that type of thing. I mean, how are you handling?
Well,
that?
how it's turned over is pretty significantly varies based on, again, like whatever the buyer motivations are. So I mean, and how we handle all of these unpaid at the end of all this is really going to be handled the same way, because some of them will choose to waive those balances and start fresh. Some of them will choose to evict. Some owners want us to push really hard on them. Some of the, it really just varies, on what you're able to do and what owners want to do. And it's really across the board. And it has to do with just whatever the sentiment of whichever buyer is at the time.
Yeah, everything's on a case-by-case basis, but I want to stay with you, Michelle, just for a second. I want you to comment a little bit on the move-outs, voluntary move-outs. Where are these people going? Are they just some people abandoning their units because they know they can't pay and it's going to catch up to them? I mean, are there really any evictions going on at all?
Okay, so I mean, the most recent CDC memorandum states that we can't evict based on non-payment through the end of the year.
Okay, non-payment.
So that's if they for non-payment only, and that's if they submit to us a declaration page. And we actually have only received about 10 of those, and so that's an extremely small number. But the reality is that we can still evict them. You can still go to court and evict them, and a lot of times you'll get your eviction. But the problem is that you're not getting your writ. And well, I mean, even in the evictions, like we had 7 of them that went through a week and a half back, and for no other reason, they had not submitted the declaration page. The judge pushed back 3 of them. And so it's like whether or not they legally can and whether or not they do is 2 separate things. And so, even when the evictions do go through, the writs are super not going through. I mean, the constable is handing out that declaration form. We received one yesterday where I was certain they didn't even know what they were signing, and they did not remove the residence. So, you kind of, as an owner, you kind of got to decide if you want to go through and spend the money to evict these people right now, when really the likelihood of you getting them out is extremely low. We actually we are seeing some abandonment, but largely people are continuing to inhabit the units and not paying. and then it's and we cannot get them out. And so that's really what we're seeing most of right now. But to figure that out, I mean, we're checking the units frequently, and it is obviously better for us if they do abandon the units or turn in keys. But we're not getting a whole lot of that.
Okay. There's one statistic that me and my clients kind of follow a little bit. It could be just the way I do business, but it's been the like occupancy obligation. It's like it's a percentage of somebody's wage and income in the community. Can they afford to pay the particular rent? I know in Phoenix that percentage rate is about 25% of somebody's wage goes to rent. Albuquerque's 23%, and Tucson's 17%. Does that work? Do you guys use that number at all, or any comments?
We're supposed to be our standards are 3 times the rent.
Okay.
It's supposed to be their income.
I think that's just good marketing for investors to come in the marketplace. But yeah, Tucson, we have probably the smallest fraction of our rent is coming from our total income. It's coming from rent. So it's a ploy to say, hey, we can push rent up further.
Exactly.
It's not, it's more of a marketing platform than just something that we study.
Homer, comment?
Yeah, I mean, obviously it's more marketing than anything else on that, but it is attractive to the outside investors when you start looking at these numbers.
Everybody likes a winner and loser, right? I want to label you. I want to put this tag on you that you're the loser, you're the winner. What do you think, Alan, in this particular market, be it an investor, owner, a tenant in the multifamily world? If you touch that world, where are the winners and losers right now?
The winners are the residents that live in their units for rent free for 3 months. Right now, the winners are the sellers that have places to place their proceeds. They're sellers that are willing to pay the taxes. They're getting pricing that we haven't been able to get them in years. The losers are syndication groups and investors that are having to really stretch to make deals work. And really forcing deals. It's hard to be it's hard to find a deal in this marketplace. You're paying retail plus for almost everything.
Homer, who are the winner and losers right now?
I would say winners are people who bought 5-6 years ago, where they've increased their rents, quite a bit, so they're way more profitable. Losers are, I would say, talking to tenants when you're walking around like, why is my rent going up? That seems like, oh, I got to pay more money on that aspect. But yeah, I mean, winners, I think, are just people who have purchased those units and properties 4 or 5 years ago, and that have just kept them in long-term hold and moved on up and collect that yield.
Okay. All right. Thanks. The next couple of questions I got here for you, the panel, has got more to do with kind of like the particular product we got in Tucson and the local market. And I want to talk about the University of Market Demand shift. Okay. And that topic is like, I heard with some of my fellow property owners, because, I've got multifamily properties that I own too as well, that we're seeing a shift from those last year that were in the high towers of the university coming down to my smaller complex properties, and vice versa. You guys hear about that at all? Anything going on there, Alan?
Well, the student market is, there's 2 markets that are, going through a huge change right now. That's the Section 8 low income market, and that's the student housing markets. And that's where I see the most opportunity for an investor coming up. There's a lot of hesitation, questioning of what the student housing market's going to look like going forward. Is this going to be enough? Are we going to see more students going online? Are we going to? So you're getting a lot of owners coming to us and trying to get out now. But there is a trickle down effect. There's always going to be a trickle down effect of what's going on. The one-time A properties are now the B properties with all this new inventory that's being built. B properties are the C properties, and those C- properties are the ones that are really going to have to put in some money to, to get the rents they were getting before. But it's going to be a very interesting next couple of years in the student housing market for sure.
Yeah, Michelle, to comment on that for me?
Yeah, when it comes to student housing, one thing that I have absolutely noticed over the years from just getting thousands of calls on renting student housing is that the trends on it change. And so, I mean, I've always kind of felt like that was a bit risky just because, I mean, I've said that, when I was, in college, we loved those little historic homes. And then, it went to those high rises where all the kids like the high rises. And now, like you mentioned, James, I am seeing that they're moving away from that. So I feel like it's such a moving target, student housing, that isn't always one that I can predict.
Yeah, Omer, comment?
Well, I got several clients with student housing, and their biggest concern is to see what's going to happen in January and February, because that's when student housing starts to lease up for the following year. This year, they've been happy. Everything more or less got rented out for them. There were no issues, no cancellations. But now that, the U of A is on pause, they're kind of on hand to see what's going to happen. Where are they going to move forward with keeping pricing where they're currently at, drop pricing? So that's a wait and see. But the one thing they did tell me was they still have the demand after, talking to the students, and that the students don't want to leave. They still want to have that experience of college, not to be at home, so they'll go out and they, do all these different things and see people and whatnot, instead of still being in mom and dad's basement. But that to them is huge, because they still want to come out here.
Right. All right, so we're getting close to the end of our program real quick, and I want to kind of pitch off to Tiffany. We need to give our sponsors a little time if we can get those videos rolling. Then after those two commercials, we'll go into our question and answers. And then as we wrap up, I want to go through each one of the panelists to give us our market predictions. So I'm keeping everybody at the edge of their seat until the very end of the program. So Tiffany, go ahead and roll it.
Okay, let me know if you guys hear it now.
Okay.
Hi, I am Jeff Murtaugh here from Realty Executives Arizona Territory. Our sponsor spotlight is today. Sorry we can't do it in person, but I'll give you a brief overview of where we've come in the last year. Last year I told you that we were attempting to purchase some real estate companies in northern Arizona.
And we did.
Achieve that goal. We had our name as Realty Executives Tucson Elite, and now we've changed it to Arizona Territory so that we can accommodate the Northern Arizona offices. We have offices in Pierce, Tombstone, Tubac, Green Valley, Sahuarita, Tucson, Vail, Marana, Payson, Prescott, Prescott Valley, Sedona, Cottonwood, Happy Jack, Christopher Creek, and I'm sure I forgot one, but we have 28 offices now, 635 agents. Last year we did approximately $1.1 billion in sale and approximately 5,000 units. This year we're at $1.5 billion in sales and 6,000 units. Our title company is doing extremely well. The real estate market is extremely strong due to the extremely low interest rates. It is certainly a seller's market. We are getting as many as 20 offers on a listing in literally a couple of hours. So I don't see this changing for a while, as the Feds have indicated interest rates are going to stay strong through the end of 2023. Strong, I mean low. And it's all good. Real estate's great right now, and knock on wood, we want to keep it that way. I hope all you people are staying healthy and well, and we all get through this pandemic, and I wish you all good health. Thank you so much.
Thanks, Jeff.
Why Stewart?
Because we don't just know Tucson, we know Tucson commercial real estate. We've been insuring commercial transactions since 1960, longer than any other title company in Pima County. We are proud to say that Stewart Title is still your go-to title company for all things commercial.
Whether it's Michelle Jolly, Kathy Hansen, or Denise Monahan overseeing your commercial transaction, or Michael Bach, Bob Dicko, or myself, Karen Radke, bringing you the latest education and tools needed for today's market. We're here for you.
Thank you for letting us serve you over the past 60 years. If you haven't tried us yet, we'd love the opportunity to show you the Stewart difference.
Awesome. Tiffany, awesome. It worked. Hey, Gary, you want to field a couple questions for us, and then we'll do our final
Sure.
wraps of the panel.
Okay. Some of these are specific, but I think we'll just leave it open to whoever wants to answer it. What do you think about the CBD renewal and expansion, Central Business District?
Alan, that's got to come from Isaac. You might as well go ahead and take it.
Yeah, it is from, well, I can't say who it's from.
Tucson's a small town.
Alan, do you want to do that?
I have no comment on that.
Okay.
Okay.
Next question.
Next question. What do you think about, do you think we're going to have an impending market correction? Since everything's so hot right now, do you think there's going to be a correction?
I think we're at a very unique time right now. You know, I don't, without getting too political, we got an upcoming election, and you know, I take phone calls from owners and investors all day long. Everybody has a differing opinion of what's going to happen if a certain person's in office. You know, I think that we're going to see a slowdown these next few months until the election. I think, you know, November and December are going to be really quiet for us, and I think that we're going to see January, hopefully, increased activity again. But, you know, I think a lot of people are, you know, you're hearing rumors about 1031 going away. You know, you're hearing crazy stuff that people are hearing about how it can affect the real estate world. And I think until we know what's going to happen and who's president, it's really hard to guess. But I think as long as interest rates are low, we're gonna be healthy. You know, they're low for a reason, and I think it's really contributing to why we're seeing so much activity.
Okay, great. That's all we have for questions. Now we can go into the summary.
All right, well, let's go around the table. Let's take a wrap up. So it's kind of like, Michelle, we'll start with you. What's your prediction for 2021 in a multifamily world, whether you want to talk about brokerage or property management? So.
Yeah, I think that quite a bit is up in the air right now. But I think that with this COVID, everything might slow down for just a bit, and we might even see maybe 2 to 3 years where things have slowed in terms of what people were expecting with cap rates. But I do think it's going to stabilize out, and I don't think that rents are going down. Like I said, there is plenty of room for increases, and I think that we're going to continue to grow. And overall, considering that, again, nationwide, this is a problem. Worldwide, this is a problem. This is still a fantastic market to invest in, and there's still a ton of room for growth. And so I think that we're going to be thriving in 2021, late 2021, probably.
Okay, Omer, give us your wrap up.
Well, I think things will still stay strong as long as interest rates stay low. There's a lot of cash out there throughout the United States, and we'll continue seeing outside investors outside of Tucson coming in, investing here. We got massive growth in the city. Those are all the big positives that are coming in this direction. And, you know, we seem to have a bit of a shortage for quality, you know, units and whatnot. So that is really making it attractive, especially as those interest rates stay low and those cap rates in other cities are quite a bit, you know, lower, and they're in the 4s and 3.5 in certain little areas. You come out here and get something at a 6, 5.5 value add, they'll continue to move forward.
Mm-hmm. Great. Ellen, give us your prediction for next year.
Well, I learned in my 10th grade economics class that as long as demand is way higher than supply, we're going to be in a similar economy to what we are right now. And I don't see that changing. There's a lot of positivity with Tucson. You know, a lot of people want to invest here, spend money here. I think Tucson is, if we were to see a correction, Tucson would get hit nowhere near like many of the other markets. Mm-hmm. I think we're just starting to see our real growth, and we're going to be in a good position for the next few years.
Yeah, and I'll go ahead and answer the question for myself a little bit too as well. We got about one more minute left to go, but I think we'll be okay. And it's interesting, my last question I had on my little list to ask the panelists is what their experience was, the difference between 2009 and today. And I didn't ask that because I realized the youth that was coming up behind me. So, but the interesting that I'm seeing as far as for my clients in this particular environment we're in is that this pandemic thing is affecting everybody. Where before in the downturn of the mortgage market crisis, it was those that over leveraged or got greedy or extended themselves too far that got hurt. And then I asked a question about blood in the streets, and there were people looking for it, but there isn't any. There probably won't be any. And if we all work together, we'll definitely get through all this. So I know it's 2:30. Tiffany, I want to wrap this thing up. I want to thank, of course, all of our sponsors. If it wasn't for our sponsors, we wouldn't be able to put out these particular programs. Thank Omer, Alan, Michelle for being our panelists, Gary for watching my back, Tiffany for keeping the slides going as we all do, and definitely want to thank all of our guests that are on the line today for participating and hearing and letting us talk about ourselves. So be well, and we'll see you guys all next time. Thank you.
All right, thank you.
Thanks a lot.